We're going to look at another question for the accounting equation, and they are providing us some information, and you have to analyze it according to the table that they give us. Important thing, the bank balance is favorable. So we've got to if it's favorable, it means we've got money in the bank, it is an asset. Always look for that. If it is unfavorable, it means we haven't got money, we owe the bank money, then it's a liability. Then we must treat it as a liability. But in this case, it is favorable, so it's an asset. So we're going to work according to the table that they give us. We've got to say what account to debit, what you want to credit, the amount, and the effect on the equation itself. So let's look at the first one. Our supplier charge the business interest. So they're charging us interest on an overdue account of 12,000 for 2 months. And we've got to provide for the interest. We're going to still follow the steps. First of all, determine the two accounts. Now, if we owe somebody money, we call that a creditor. So the one account will be creditors control. We owe them interest now as well. What is it that we've got to pay them? Interest. And we call that interest on overdue account. Good, so let's now do step 2. Step 2 is to classify the account, say if they're asset, liability, or whatever. A creditor, somebody we owe money, we're going to pay in future, is a liability. It's a liability. If they charge us interest, it means we've got to pay more, we owe them more, so it will increase. And a liability increases on the credit side. The interest that we have to pay is immediate. It is an expense. And we've now got to pay more interest, so it's more expenses, which means it increases on the debit side. So we're going to debit interest on overdue account and credit creditors control. So the account debited is interest on overdue account, and the account credited will be creditors control. The amount, now we've got to calculate the amount because they tell us we owe 12,000, we've got to pay 12% per annum per year, but we only charge 2 months. So let's see how we do that. So it is 12,000 that we owe them. On that we need to pay, let's see, 12% interest, so it's 12 divided by 100, but not for a full year, so we've got to also multiply it by the number of months over 12, and that is 2 months. 2 months, so it is times 2 over 12. So if I take 12,000, multiply that by 12 divided by 100, multiply by 2 divided by 12, it should give me 240. So the interest I need to pay is 240 Rand. Let's see what I said there. I said liability more. So go to liability and put a plus in there. Just make it a bit bigger. So we set a liability plus. So we will plus the liability. So under liabilities, I'll put in a plus. Good. And we said interest is an expense if it comes to income and expenses, we've got to figure out what will happen to the profit, because owner's equity consists of three things: the capital that the owner's got, less the drawings that he made, plus then the profit. So, and the profit is made up out of the income less the expenses. So if we've got more expenses, we'll have less profit. The more expenses we have, the less profit we have. And the less profit we have, the less equity the owner will have. So owner's equity will become a minus. So it's a minus under owner's equity and a plus under liabilities. Let's look at the next one. Goods sold on credit for 6,000. Selling price, the markup is 50%. You must make two entries. Why do they say that? For sales, there's also always the sales transaction plus then the cost of sales. So let's look at the accounts and the transactions. Okay, we sell on credit. In other words, somebody owes us money. That person is called a debtor. So one account will be debtors control. And it is sales. We're selling stuff. So it's debtors control and sales is the first entry transaction. A debtor owes us money. He's going to pay later, which means he's an asset. He owes us more money, so the asset will increase. What side do we increase it? On the debit side. Sales, immediate, and it's money coming in, so it's an income. We've got more income because we sold more, and the income increases on the credit side. So the sales one, let's put that one in first, then we'll look at the cost of sales. So it's for number 2. I said debtors control debit, debtors control, and sales credit, sales. So I just do whatever I worked out down here. The amount will now be the selling price. What did I sell it for? Well, I sold it for 6,000 rand. So that I can put in. I said assets gets more. So under assets plus. And I've got more income. Income affects profit. More income, more profit. So the owner's got more money. So it's a plus under assets and a plus under owner's equity. But if there's sales, there must always be cost of sales. So the second one will be between cost of sales, and that always goes with trading stock. So the second transaction is between cost of sales and trading stock. Cost of sales, it's costing me money, which means it's an expense. It's costing me more, so I'll have more expenses, and expenses increase on the debit side. Trading stock, stuff that I've got in the storeroom, it's an asset. I can sell them at a later stage and make money. I sold some of my stock, so I'll have less stock in the room, and asset decreases on the credit side. So I can put it in. Cost of sales, debit, trading stock, credit. Still under 2, it's the second part. So it's cost of sales in the debit side and trading stock credit. But now I must go